Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we are looking for a finished corrective structure and continuation to the upside. In this scenario, wave Y is then a zigzag 535 to the downside, but that leaves us with a problem because wave W is also a zigzag, and in a sideways double combo WXY scenario, wave Y and wave W are not allowed to be the same pattern. If wave W is a zigzag, then wave Y has to either be a triangle or a flat scenario, but clearly it's not a flat and clearly it's not a triangle as well. And if we want to see a double zigzag WXY scenario, then we are looking for a sharp move to the downside, and there was a great example on the chart, which is this structure over here. This was a nice sharp zigzag to the downside. You can see this looks completely different to the horizontal price action that we have now, and also wave X is then not allowed to take the origin of wave W, which is the case in this scenario. So if we want to look for this scenario to be valid, we then have to move this wave X to the left side over here and count this as a potential ABC flat. But then we encounter another problem where this is not going to be the low, because in a wave C to the downside and then an ABC, you're counting a 5-wave structure in a wave 1, 2, 3, 4, still looking for another 5 to the downside, but that is something I'll talk about in the medium time frame bearish scenario. So this lowers the probabilities for this low to currently be the low and new highs to come. If we zoom in to this structure at least and count this as a zigzag, then also here the probabilities are not really on the side for an ABC, where this is then a 5-wave A, 3-wave B, 5-wave C, extended all the way to the 1.618, which is a rare target for a wave C, but a common target for a wave 3 in a 1, 2, 3, 4, 5. If we then count this at least as the low and we look for bullish structures on the micro time frame, we zoom in and go to the 30-minute. And on this time frame, we now want to see bullish continuation. The low is in. This is then a wave 1, wave 2 is in, closing on top of the 0.786, a common target for a wave 2. However, it wicked into the 886, and that is not nice because the 886 is a rare target for 2 and a common target for a wave B or X, increasing the probabilities of this move to the upside to still be part of a corrective structure. Now, if we do look at the more bullish scenario, then over here I have a wave 1 and a wave 2. Those are high degree Elliott wave structures. Then a second wave 1, 2, and the blue count over here, the blue 1, blue 2, 3, 4, 5, is a sub-degree count of wave 3. So the blue count goes inside the wave 3, and after the blue count is finished, and therefore wave 3 is finished, you have green 4 and then eventually green 5. The thing is that in a double 1, 2, 1, 2 scenario, you want this second wave 1 to be shorter in time and price compared to the first wave 1. And you can see how much longer this potential second wave 1 is compared to the first one, lowering the probabilities that this double 1, 2 is valid. But there's not really any other great idea or way to count this towards the bullish side, because if we count this as a 5-wave move, first of all, well, wave 5 is not going to go to the moon, right? Because you want it to be a wave 3. The most common target for a wave 5 is between the 1.236 and the 1.618, taken from the high of 3 to the low of 4, which is between 26.9k and 27.2k. And if you want to count this as a 1, 2, 1, 2, for now, very soon, a bigger wave 3 to the upside, then the second potential wave 1 here, and then this 1, 2, 1, 2 continuation, this second wave 1 is longer in price than the first wave 1, which again lowers the probabilities of this being a 1, 2, 1, 2 for then a very impulsive wave 3 to the upside. So the probabilities of how price is forming here are not really on the side of the bullish scenario. Now, if price does manage to pump towards the upside and at least go to around the 28k level, we can talk about more bullish scenarios, but till that moment, the bearish scenarios do have higher probability. And if we then go to the bearish scenarios, then over here we have the scenario where we are still looking for a move to the downside, and then a 5-wave C over here, where the most common target for wave C is between the two 1.618, which is between 23.4k 21k and 22k. Nice area of support over here as well with my blue support box that I have between 21.8k and 22.6k. What is also in confluence with another low in the making is the fact that on Bybit this low over here got taken, but on many other charts this low over here did not yet got taken. So usually the charts do align where all the charts on the higher time frame are at least taking the same high or the same low. So it would be nice to see all the other charts also taking this low over here, which would be the case with this particular scenario. If we go to the low time frame, we are then looking for a 5-wave move to the downside. In this scenario, the 1.618 is a common target for wave 3. However, looking at the lower time frames inside of this wave 3, it looks like we might get another wave 5 to the downside to finish wave 3, then look for 4, and then eventually a wave 5, where again, this low over here is going to be a very interesting target for maybe a bit of a bounce and then a 4 and then a 5. If we wig the low and we continue, then we can potentially agree the low of 5 is in, but that is yet to be seen. If we then look at the corrective structures on the lower time frames that support this more bearish scenario, we are looking at corrective structures in a 3-wave pattern, either an ABC to the upside, where this last leg to the upside is then a 5-wave structure in a wave 1, 2, 3, 4, and then a wave 5, ending around the wave C most common target area between the 1-to-1 and the 1.236, sitting between 27.1k and 27.5k, which is also just above this high over here, which is an interesting target, and usually also for a wave C a minimum target, as you want to see wave C ending above wave A. And the other scenario is a WXY, where the target area for the yellow wave Y is between the 0.618 and the 1.236, so that's a bigger target area, and the 1-to-1 to the 1.236 that you see over here is then the final 3-wave structure, because a WXY is a 3, 3, and a 3-wave structure. So all the waves, W, X, and Y, are 3-wave structures. But in an ABC, wave A is 3 waves, B is 3 waves, and C is a 5-wave move. But in this scenario, the target area for a wave Y has been hit, and then the final structure being an ABC zigzag, most common target for a zigzag over here between the 1 and the 1.236, very nicely expected, and now you then want to see continuation to the downside. Now if we then zoom in and we observe at what has happened, then if we look for continuation to the downside, we are looking on the higher time frame for a wave C and a wave 5. We still want to see impulsive structures to the downside, but at the moment this over here looks very much like a 3-wave structure. Then we can think about potentially a diagonal to the downside, but it's very, very early to call. So at the moment, the probabilities are higher for this high over here to probably be taken still. Maybe also take this high over here and then take it from there, unless price is going to move towards the downside. Because if we look at this being an impulse in a 1, 2, 3, 4, potentially a wave 5, then price over here bounced on the 0.5 Fibonacci taken from the low of 2 to the high of 3, which is a maximum target for a wave 4. If price is going to close candles below 26.3k and going down all the way here, then the probabilities are low that this is still a 1, 2, 3, 4, 5 for further upside, and we might have to look for continuation to the downside. If we then look at some of the levels I'm keeping an eye on, then this support resistance area over here in the middle of the channel is very, very important. It was support, turned into resistance for a long period of time and acted as support once again. You definitely want this to hold if you're going to be looking for more upside still. And to the upside, we then have first of all this high over here at 27k and then the monthly at 27.2k. Moving to the downside, the first level of potential support at least is the daily naked point of control at 24.975. If we look at the CVD divergences, we had both bullish and bearish CVD divergences, and I mentioned in the morning update that the bullish CVD divergences appeared first, so therefore they have a higher probability of playing out. This high got taken, very nicely played out, and now we have to wait and see what is going to happen more locally after the bullish CVD divergences have played out. If we then look at the probabilities of the different scenarios, then on the medium time frame, low time frame, and the micro, we are still looking for price to move towards the downside. From an Elliott Wave perspective, as explained, the probabilities are higher for price to still take these lows, and once these lows are taken and potentially this low as well, we observe what happens over here. Only more locally, going into the lower time frames, it could be interesting for price to still find a little bit more upside to take this high, but also this high over here at 27k. Observe the reaction that we get, potentially the monthly at 27.2k, for then a potential resistance and continuation to the downside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.